Welcome back, traders and investors. We have Mike Seery on the line. He is president of Seery Futures. Mike, how you doing? How was your 4th of July?
Very good, very good. I'm looking forward to getting back to work here this Monday morning, as the grain market has not traded since noon on Thursday, so it should be an exciting day today.
Okay, was there any news out over the long break that will be affecting these grain markets?
The only thing that was going to affect them here is we had a crop report last week, a USDA report, so we don't have another report for over 3 more weeks. It was just good weather. We rained again. Now, I'm talking to you from the suburbs of Chicago here in Illinois. A lot of soybean, a lot of corn in this area. Crops look good. We had nice rain, mild temperatures. That's what's pushing the prices lower.
Okay, so following the grains, I mean, you have to just pay attention to the fundamentals, right? I mean, do you use any technical analysis, or you're pretty much following those crop and weather reports?
Well, I am a technician, and I am short soybeans currently. It's been a very good trade, and I'm still recommending short positions. I think they're going lower. So, no, I'm a technical trader as well. When prices broke $12, that was the breakout, and that was off that USDA report. But, no, it's a combination of both.
Okay, and talk to us about your technicals. What do you like to follow?
What I like to follow, I like to keep it simple. I like to enter on a trade on a 4-week low or a 4-week high. If something has hit the lowest price in the last 20 trading days, I'm going short because I'm a trend follower. If something has hit a 20-day high, I will be buying that and placing my stop below the 10-day low as my risk parameter. But what I'm trying to do is catch the trend, and I'm always going in that direction.
And how did you come up with that that number, that particular level to focus
Well,
on?
I've been doing it for over 20 years. I've seen many trading systems, and I've kind of taken a piece from one and a piece from another and seemed to have what has had the most success and kind of stuck with it.
And you said you also will use stops, and what are they based on?
Now, my stops, so right now I'm short soybeans, but the chart structure is very poor because we collapsed in price last week. But I'm short. I place my stop if I am short at the 10-day high. Well, currently the 10-day high is 1247 in the November contract, and we're trading at 1130. That shows you how far prices have come down very quickly. But that's where I want to exit, is if prices go against me, I want to be out if something's been going against me for 2 weeks.
Wow, you can take that kind of heat then, huh?
Well, that 10-day stop will tighten up in a couple of days considerably.
Okay.
And we're not going to 1247 in the next couple of days. So basically, at this point, I don't even have a stop in.
Okay. All right. Then what do you use for targets?
I don't have any targets. I think it's a fool's game to put a target. Sometimes I'll throw a number out there, but it's too difficult to do. So all I do is just keep moving my stop up to the 10-day low or the 10-day high, and eventually I get stopped out. But I'm going to try to get as much of that trend as I can get.
And will you take everything off at one piece, or do you have designated levels where you just kind of try and scale out of things?
Sometimes you can scale out at different levels. It depends on how much of the profit is. I mean, if the profit is outrageous, like in feeder cattle or in some of these trades, you can scale out. If you have multiple contracts, if you don't have multiple contracts, then you just have to put that stop there, and that's it.
And they don't trade pork bellies anymore, huh?
No, it became too thin. But what's been an absolutely terrific trade has been the hog market. And we caught that earlier this year, and the hogs went to all-time highs just like the cattle market. So hogs are still a very viable commodity, and you definitely can trade those.
Yeah, and what was the driver to take the hogs up?
They had the virus, so there was a huge slaughter of the young pigs, therefore cutting supply. And other major influences, too. Feeder cattle and cattle prices continue to hit new highs. So the spread between pork and cattle was too wide. I mean, if I'm going to pay $14 a pound for a steak and I'm only paying $2 a pound for pork, well, the demand is going to start coming into the pork because less people are going to be paying $14 for beef. So that sent pork prices up as well. The meat complex has been by far the biggest bullish bull market in 2014.
Okay, and you look for that trend to continue.
I look for it to continue here, at least in the short term. Now, remember, feeder cattle benefits with lower corn prices. Corn prices continue to hit new lows. They're going to be lower again today. Also, we have the lowest herds in 63 years, as the USDA stated last Monday's crop report. So we have tight supplies. What also has happened, Joel, is people are getting out of the cattle industry. It's a 12-month-a-year, 365-day job. They're getting out of that, and they're going into grain farming if they can, if their plot of land allows it. You only work about 7 months a year. It's very profitable because of such high prices. So there's a fundamental shift, and that's why there's so many few cattle, because there's a lot fewer farmers doing it. And that is not going to change for years to come unless the grain market really collapses, where then that's not profitable to do that switch.
Okay, so they're just going where the money is here and raising
And
whatever.
less work.
Yeah, yeah. Hey, that's a good concept.
You know, we were 50 degrees below zero in Chicago many days. Well, a grain farmer was sleeping in bed because it was January and had nothing to do if he's a soybean or corn farmer. If you're a cattle farmer, you're out in 50-degree below weather working your tail off.
No, that's a great point there. So you follow other commodities as well, and two commodities that are very popular. People like to follow is the crude market, and
Yeah.
we had some chaos, some things going on, and usually crude and gold could be your fear trade, fear of supply. Could you give us your short term and your long term outlook here for crude?
Well, crude, I was bullish crude technically when it broke the 104. The trade fizzled on us. Basically, it was just a neutral trade, but it doesn't have any direction right now. Now, there's a battle there because you have the WTI crude and then you have the Brent. And anybody who doesn't know the difference, the WTI crude is just the crude here in West Texas. It's light, sweet crude. It's lighter. It's cleaner. The Brent is the OPEC crude oil or the Middle Eastern crude oil. So problems over in Iraq can send the Brent up because they could have supply issues. But here, we are starting to become a large exporter. There's plenty of gas and oil around. So I don't see the price going up much more. We're in a deflationary period. Look at many of the commodities. They're going lower. They're not going higher. So I look for lower crude oil prices, but I don't see anything dramatic. So you kind of have the bulls and the bears fighting on this one because you also have the stock market hitting all-time highs, which tells you economies are improving. Therefore, demand for gasoline will also improve. So you can argue on both sides, but I think it's just going to be choppy. I don't see a whole lot of excitement there here in the short term.
For crude, I mean, I like to pay attention to double tops and double bottoms, triple,
Right.
and on the upside. And boy, oh boy, this is really having a hard time getting through the 103.70 level. You have your last three lows. So me being a shorter term trader, if it takes that out, I'm definitely be trying it on the short side. And
Oh, yeah, I agree with you there. If it does break that out, the problem with geopolitical nonsense is it fades. Last August, we had the Syrian thing. Crude went up to like 112. The world was coming to an end, and literally the next day, you never heard about Syria again. And that's kind of what's happening in Iraq. You don't even hear about it anymore. 2, 3 weeks ago, it was every second on the news. Now it's old news, so the prices come right back down.
okay. And what about the gold market? Boy, it got that boost with Yellen thinking that she was kind of ignoring inflation. Got it all the way up to 1335, and as gold
Yeah.
does over its long course of trading, it consolidating here between the lower the moves, 1305, the upper end 1335. Here we are, smack dab in the middle. It doesn't look like it wants to give it back up. What's your short term and long term outlook for gold?
Well, the problem with gold, and I've been saying this in a lot of my previous blogs on my website, everyone wants stocks. So everyone's pouring in the S&P 500. So gold is the money flow is coming out of gold into stocks, and I don't see that stopping. I think you're going to have another double-digit year in the stock market. I think gold's just going to continually to grind lower. I would be negative gold at this point. However, silver prices I've been talking about for a long time and have been bullish silver. Silver prices are cheap compared to the rest of the commodity markets, but silver actually has a usage in electronics. Gold has no usage, so I would be selling gold on any type of geopolitical rally.
Looking at this silver chart here too. I mean, it's had to run up, kind of similar here. You're looking at for it's tried to break out over 21 and a quarter a couple times.
Yeah,
Yeah, you looking for
we
that move
we
to continue?
well, if gold peters out here, it's going to be difficult. Now we are long from 2002. That was the breakout. So this has been a good trade. That was a 4-week high there at 2002, and our stop is at the 10-day low, which is not very far away. It's about 15 more cents. So I'm not going to give this much more room if it starts to come down. I just don't like gold, but I think silver has bottomed. And if you're a longer-term investor and you have some deep pockets, on any significant dip in silver, it should be bought.
Okay, all right. And let's see some of the other commodities here that you're following, or in particular, something you see some good setups in.
Well, I like one setup. Now, I cover the softs, and the
Oh
softs are
yeah,
the
yeah.
exotics, like coffee and cocoa and sugar. Sugar has been in a 3-week consolidation. The longer the consolidation, my theory states, the more powerful the move. And sometimes you get false ones. But look at sugar to the downside if it breaks 1745 in the September contract.
Yep, I
I'm
do.
sorry, in the October contract.
Okay, all right. I
To
do
the
see.
downside. And then right there, then what I do is I place my stop above the 10-day high, which currently would be at 1880. So you're risking around $1,400 per contract.
Okay, all right.
Okay.
Yep, I
But
see.
that stop will be moved down dramatically also in a couple of days. So that's worst case scenario. The bear market seemed to be entering the commodities. We're getting very good weather throughout the United States on the agricultural side. They're pushing everything else down. So right now, here in the short term, prices just look weak.
And by good weather, you mean rain.
Rain. And not only rain, but we're 85 degrees every day, 82, 80. There are no, in 2012, we suffered a really bad drought. And we were 95 a lot, 98. We hit 100. And we had those many consecutive days. We're not having that heat. And we're already July 8th, I think, today, July 7th. We only, the growing season's almost halfway through. So if something doesn't happen quickly, weather-wise, we're going to have 84 million acres planted in soybeans and tons in corn. These prices could go much lower.
And what about coffee? I mean, coffee, the softs tend to move together. You got bearish thesis for coffee as well.
No, you know what? I've had some recommendations to buy coffee right around here in the September contract, 173. Now, I have the stop at the 4-month low, which is also the 10-day low. It's the same price, around 166 in the September contract. So your risk is around $2,000, which is small in coffee because coffee is a very, very large contract. But it looks like I'm a little vulnerable on this one as well. It just looks like the shot. I'm keeping my stop there, hoping we can turn around. But everything looks a little weak. And look at cotton prices. Cotton prices hit 2-year lows this morning, down another 90.
All right, cotton. I'm trying to find the symbol here on
If
mine.
you look at the December contract, Joel, that's the new crop. And again, just really good weather in. Now that's grown obviously in the southern part of the United States.
So your thesis here for commodities, was really bullish for the market here as far as the Fed having to raise interest rates and whatnot. You're kind of just looking at a real quiet, commodities markets and point to that as low inflation, and the Fed's not going to have to do much with rates.
They're not going to have to do much with rates, and it is low inflation. They are still worried about deflation. That's the problem. Prices are still going lower, except in a couple of things like the meat sector, but they're still worried about deflation. And put it this way: what if they hadn't done this $1 trillion in stimulus, or $5 trillion over the course of time? What if they didn't do that? Where would these prices actually be? And I would have to think, and I think a lot of people would agree with me, they'd be much lower.
Okay, and do you follow the S&P futures at all?
Oh, yeah, and I've been recommending a long position in my blogs on that for months and months and months. I think we're headed towards 2000. There's no reason to be short this stock market. It's going to continue to move higher. You just have to join the party. You cannot be short.
And what would change your mind on that?
The only thing that's going to turn it around is bad earnings, and we're not having bad earnings. The bullish case here is several bullish cases. You have the Fed that wants to prop up equity prices. You have the Obama administration who wants to also boost up asset prices. You have companies with massive, massive amounts of cash on the side. Even if there was a problem, these companies like Apple, like Google, they don't have to borrow money. They have money and tons of it. They're also buying back stocks. Therefore, they're increasing their earnings per share because there's less of a float. Then they're also increasing dividends. And about 180 stocks in the S&P 500 pay a higher dividend than the 10-year note. So it's creating a demand market as people cannot make money in the bank, so they're buying AT&T at 5%. They're buying Apple at 2.5%. And that's not going to stop.
Right, right. Where else are you going to put your money? Theory
Right.
comes out again. And then just finally, I'm not sure how liquid the options are in the commodities markets, but do you, for a longer term plays at all, do you try and use the options markets?
Many of the option markets are fine. You're not going to have any problem. S&Ps are really good. The grain market's real good. Some of them are a little poor, and I would advise people like copper options. You can't even do them, but you can do many of them. Bond options for sure. If you think rates are going to start moving up, you definitely can do that. Currency options, but no, you definitely can do. I don't like buying options outright because 80% of them expire worthless, so that's a difficult way to make money in the long run. But I like spreads where you buy a call and you sell a call against it, reducing risk,
Okay, all right.
stuff
We
like that over the
okay.
course of time.
Mike Seery, president of Seery Futures, follows the grains, the meats, and all the commodities markets, giving his outlook and giving us a peek into his trading strategies. Mike, thanks for joining us this morning on Benzinga's Pre-Market Prep, brought to you by Options House, and we hope to have you on again.
Hey, thank you. Take care.
Okay, have a good day.